With global risks escalating and geopolitical tensions rising, central banks around the world are implementing diversified allocations. Translation, they're selling treasuries and buying gold.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and in today's market rundown, we're going to talk about miners and what happened yesterday, before, during, and after the run-up. And then we're going to talk about miners some more. But before we do that, let's look at some markets. Let's see where things are right now. The dollar is up 11 at 105.68. 10-year yields are down 2 at 468. The S&P 500 is 50.87, down 13 handles. The VIX is 1563, up 25. Gold is 23.46, up 14 and change, hovering near its highs for the night. Silver's 27.56, up 14 cents. Weak by comparison, but still looks good. Copper, consistently the strongest of the metals, showing 454, up 3.5 cents. Oil is up 28 cents. Natural gas is down 3 cents at 84.69, 174 respectively. Crypto is on the soft side, 64 spot 161. Ethereum 31.28, down 294 and down 27 respectively. Palladium and platinum are mixed. Palladium is down 11 at 971. Platinum is up 8.5 at 915. Grains are all down. Looks like wheat's leading again. Not big, very small stuff there. All right. That's the GoldFix homepage. We're not really big market timers, but yesterday was one of those days. Yesterday's broadcast was entitled Mining's Golden Moment, and we shared with premium subscribers our thoughts on the mining industry. Well, Newmont's earnings came out and it rallied over 10% yesterday, and we are long Newmont, and we said as much in the premium section. I'm going to go through that section verbally today in premium again, with some new additional information for it. But for everyone else, we're going to go through a report that came out yesterday as well, and I think very related to what we were saying from a different angle, very relevant, and one of the reasons that the market rallied. Now, before we get into the specifics of it, before we get into the macro of it, the market rallied because there is a lot of buying underneath the market. Everyone's been sensitized to it. They're looking for their opportunity to buy. So I'm a fund manager, and I say, I've made up my mind, I'm going to buy X. Well, you rarely buy X when the market's sideways. Professionals don't buy a market when it's sideways because there's no liquidity and their footprint will be very easily seen. Low volume, spike in volume. You just don't do that. You gradually buy in, or you wait for an event, what we call a liquidity event. So bad earnings come out and the market sells off, you buy in. Good earnings come out and the market rallies, you buy in. So they don't buy unchanged. They buy weakness or they buy strength. And that's because other than the footprint, they want to see how the market acts to news. You know, if it acts really bad on bad news, then maybe they'll watch a little bit. If it acts really good on good news, they'll wait for the pullback. So that's how they operate. Okay, so again, stay with us. We're going to go through some more of those machinations in the premium section. But what we want to talk about now is we're going to talk about a UBS story that came out yesterday. 7 reasons to own mining stocks. Up there, the 6 parts above that, that's the premium from yesterday that we're going to go through again today. All right, so comment. UBS's analysts put out a report yesterday, separate from the one that I saw. And it goes through in quite organized detail why you should own mining stocks now. Now, as if you're a mining person, you're going to say, I knew that. I knew that. I knew that. The point is they all knew it too. They're just waiting for the timing to matter. These are very timing-oriented people. They beat the grass, for snakes or whatever they beat the grass for. And when they come back with the right feedback, then it's time to go. And they believe, as do I, that the catalyst is now. If you know me, I'm a bullion person, not a mining person, but I am a stock person. I understand how those work. And that's where we are now. We're going to be moving towards the bullion phase of things. All right, so let me read the 7 points. All right, number 1. With global risks escalating and geopolitical tensions rising, central banks around the world are implementing diversified allocations. Translation, they're selling treasuries and buying gold. That's a bullion comment. Number 2, as U.S. fiscal risks increase, investors are moving funds into gold. Okay, bigger the debt, the more we buy gold. Number 3, concerns about being replaced by cryptocurrencies are no longer valid. My opinion, they never were valid. I own both, and I'm not, ambivalent to cryptocurrencies. I like them a lot, but they're not a replacement for gold. As we've said a million times, central banks own gold. You can't do trade with cryptocurrencies if your counterparty doesn't own it, number 1. Number 2, well, there's a million reasons. I'm not going to do a gold cryptocurrency comparison right now. Crypto is not gold. All right, number 4. Meanwhile, macroeconomic headwinds are turning into tailwinds for gold. Tips yields and a weakening U.S. dollar, these conventional macro factors may drive gold prices up by another 10%. Yes, what does that mean? Well, that means when you have correlations in the market, strong dollar is bearish for gold, strong dollar is bearish for gold, high rates are bearish for gold, and those things aren't affecting the market, meaning gold strong despite a strong dollar, gold strong despite high rates. Well, when the rates or the dollar drop, you're going to have a kicker for gold, meaning those correlations aren't gone. We talk about correlations a lot here. Those correlations aren't gone. They're resetting at higher levels. So in a bear market, there is no support. In a bull market, there is no resistance. We're in a bull market, and give me a reason to buy gold and silver and now miners, and you're going to get it. That's what that means. So what is this chart here? Simple 3-factor model of the gold price relying on tips, right? They have a model, and that model basically looks at 3 correlations and how gold should react to them. And, that model's broken. It's broken on the way down. On the way up, it's doing just fine. Watch. If the dollar weakens, all the people that still believe in correlations are going to buy gold. They're going to buy silver. All the financial neo-Keynesians are going to buy everything that's priced in dollars when the dollar weakens. We will have already bought. That's how it works with these people. All right. Number 5, after adjusting for inflation, gold has not yet returned to its historical high in real terms. To reach this level, gold would need to rise by 40%. Okay. Great news, right? But, we've all known that for years, right? And there's a temptation, at least on my part, to say, we've known that. Shut up, right? No. The point is, we've known that. And you have to give UBS credit here. They recognize it's on people's minds now, and you're just a little bit early. Okay, maybe you're a couple years early, but people are catching up to you now. Number 6, market positioning, i.e. overall investor position, has not fully reflected the recent movement in gold prices, meaning domestic U.S. demand for precious metals and miners is nowhere. It's zero. It's very low. That is tied very closely to correlations. Normies, people that are neo-Keynesian, people that follow financial correlations have been steered away from gold and silver and miners because of the correlations, okay? So the rest of the world is buying because they don't give a shit about the dollar anymore. We're not buying because the dollar is strong. Well, we're all going to buy. We, meaning the masses, are going to buy when the dollar weakens. Gold stock valuations are low with price to earnings, PE ratios, 40% below normal rates. Stock prices should rise by 45%. Again, something you all know about miners, right? Well, the catalyst is here, And that's what I was saying here. Mining's golden moment. The catalyst is here, and we'll talk about that more in a second. All right. Market news, we're going to skip that for now, but what's important is Blinken is there, so you can have market gyrations because of that. Expect us to talk tough, them to talk kind, but it's what China does after Blinken leaves. China signals what they really think with their policy the day after, and they're probably not going to be happy about it. US PCE is out today, personal income earnings from Colgate, Exxon, Chevron, and Phillips. All right, geopolitics, Blinken, right? I just went through the 7 reasons. Let me show you a couple charts. All right, there's Newmont yesterday. Okay, so that's a weekly chart, and Druckenmiller bought in here. Well, he probably bought on this way down. When Druckenmiller and Elliott bought, that's when I paid attention and bought. But nevertheless, I was miserable for a month, and I can understand how everyone else is. All right, what I want to show you now is Newmont is a major, right? The majors are here, right? The juniors are here. The majors are going to outperform the juniors in this part of the rally. They just are. That's what's going to happen. Now, the juniors will catch up, but not in a timely fashion. So you're going to have to be more patient on those. Anyway, let's check the markets again, and then we'll come back and we'll do the premium section. All right, gold. Gold is well above this level that I thought was dangerous. So we're vulnerable for PCE today. We're vulnerable for all kinds of event news, especially out of the Middle East. But the soup is being made. The ingredients are in it. And they're just starting to stir it now. Okay? That's the way it is. Have a great day.
Thanks for watching this morning's Markets and Metals Update with Vince Lanci. Brought to you each day by Miles Franklin Precious Metals, where this week's special is junk silver for only $2.75 over spot. Junk silver is the pre-1965 dimes and quarters, and one of the products where we did see premium spike in the past couple of years. So find out more by calling us at 833-326-4653 or emailing arcadia@milesfranklin.com. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.